seats as close to the stage as possible. We're looking forward to a very participative session now. And with that, ladies and gentlemen, we're ready to delve into interoperability, the key to the future of cross-border payments. And without any further ado, I take the pleasure of inviting up on stage our moderator for this session, Ms. Maria Francis, in charge of America's NPCI International Payments Limited. Let's have a round of applause and welcome Ms. Maria Francis. A big round of applause, please. Thank you so very much, ma'am. And let's all together welcome all our esteemed panelists. Ladies and gentlemen, it gives me pleasure to welcome up on stage Mr. Adeeb Ahamed, Managing Director, Lulu Financial Holdings. A big round of applause, please, as I welcome sir up on stage. Thank you so very much, sir. I'd like to also welcome up on stage Mr. Honor Gunday, the CEO and founder, Paymentwall. I'd like to welcome up on stage Mr. Paul Castillo. Round of applause, please. Central Manager of Financial and Monetary Operations, Central Reserve Bank of Peru. Thank you so very much for joining us, sir. I'd like to welcome up on stage Mr. Tom Greenwood. Let's have a round of applause and welcome Mr. Tom Greenwood, the CEO at Volt. Thank you so very much, sir, for joining us. And finally, let's welcome up on stage Mr. Praveen Regmi, CEO of IME Pay. Thank you so very much, sir, for joining us. I believe Mr. Honor Gunday will be joining us in a very short while from now, but in the meanwhile, I'd like to hand over this session to our moderator, Ms. Maria. Please do take over. And ladies and gentlemen, once again, for those of you in the hall, please do settle down.
Morning, everybody. Thank you very much for joining us, and welcome to all the panelists. We are waiting for Mr. Honor. He should be on his way. I think we should be, he's coming. Welcome, Honor. So we have Honor Gunday from Paymentwall, CEO Paymentwall. Okay, so we would begin our panel. Our topic for panel is interoperability, the key to future of cross-border payments. We have this esteemed panelist, and I think I should give each of them a moment to introduce themselves. And Honor, we can begin with you.
Hello, yeah. Hi, my name is Honor Gunday. I'm the CEO and founder of Paymentwall. Basically, we started out 13 years ago, integrating global payment options on one platform. And today, we service 300,000 or so merchants around the world in helping them go global in different markets. And I'm happy to be here because yesterday we did our announcement with NPCI, with the UPI system. Hopefully, we'll be able to get Indian users to pay also in other markets with the same system.
Thank you, Honor. Tom?
Hi, everybody. Tom Greenwood, founder and CEO of Volt. We're a leading open banking company headquartered in London, but with offices across Europe, Australia, and Sao Paulo. We've been operating for about 3-4 years, about 250 staff so far, and we are connecting RTP systems around the world. And it's an honor to be here, of course, because UPI is the best example of implementation and success in RTP globally, and is the leading payment system where RTP is concerned. So here at the invitation of NPCI and Maria's team and others, and I'm delighted to be here today. Thank you.
Thank you, Tom.
Good morning, everybody. Would like to thank NPCI for this opportunity, for the invitation. I represent IME Pay, which is a household digital payment and remittance brand in Nepal. We are the largest in the country, serving Nepali for the last 23 years, and bringing happiness in the form of money to the country for more than 2 decades. And in this occasion, I would also like to, thank the executive director who is here from Nepal Rashtra Bank, which is the central bank of Nepal, for his gracious presence to hear us in this event, Mr. Guru Prasad Paudel. Yeah, thank you very much.
Welcome, sir. Paul?
Thank you, Maria. Thank you very much for the kind invitation to participate in this panel. My name is Paul Castillo. I'm the manager of monetary operations, financial stability, and payments of the Central Bank of Peru.
Adeeb?
Thank you once again for having me here at the NPCI conference. It's actually it's the second year that we are continuously participating on this. My name is Adeeb Ahamed, the managing director for Lulu Financial Holding. We have cross-border payment operations set out of GCC, Indian subcontinent, and Asia Pacific, where we're present in Philippines, Malaysia, Hong Kong, and Singapore. We do a little over 13 million transactions annually, moving close to $10 billion US annually. Last year, 2022, we moved around $6 billion US into India, that constitute to 6% of the entire remittance volume that comes into the market. Thank you.
Thank you, Adeeb. Moving on to some common questions which we might just pose to the panel here. First is, what is your response to this subject where we call as interoperability the key to future of cross-border payments? I just need a yes or a no. I just want to know what's maybe in a word.
I think
How critical? How critical?
I think so. It's the future of cross-border payments. It's very critical that we streamline the process on interoperability that could further ease both the cost of doing operations and also the ease of customer getting the money on time.
Thank you. Paul?
Yes, my response is yes. I think it will bring benefits similar to what interoperability has brought to domestic instantaneous payments.
And that's from a regulator. Okay,
it's of course a yes, because the country like us, which has an open border with India, we have seen a lot of pain point during the cross-border payment. So, this digitization of cross-border payment in an interoperable form will be a game changer for sure. Yeah.
Tom?
You just want a one-word answer, don't you?
Yes, I want.
Yes, definitely. If you don't have interoperability, you're not going to allow people to travel and make payments. They'll be stuck.
Thank you. Okay, while interoperability is a boon to cross-border, payments, how challenging is its realization? You are all into this process, merchants, some of them, some into moving money for remittances, and as a regulator, you're regulating it. How complex is to realize this? Adeeb?
As they say, devil is in the detail. Here is where things gets confusing. While we all agree to the factor that interoperability is the future and the way it needs to be, at this point of time, we have a very fragmented economies everywhere. Everybody is moving into their own national payment switch, where countries are creating their own things, partly political, partly the need of the hour. UPI was the need of the hour, whereas most of the countries towards what's happening around the world are now becoming cautious about networks that are used by larger players that are making them vulnerable in case of any geopolitical tensions, So everybody is creating their own platform. Now, when you create a platform of your own, you have your own regulatory issues, you have your data privacy issue, you have the standardization on the coding, on how the data would move from one country to another. So we have a numerous amount of questions that needs to be asked. Standardization should be the key element of all the regulators, so that once data moves from one country to another country, the element of smoothness would exist. And if that comes through, then I think so interoperability is definitely going to be a success moving forward.
Thank you, Adeeb. Paul, on the same question, while interoperability is a boon to cross-border payments, how challenging is its realization? That's a regulator's view.
I think it's very challenging because even within a country, we are in Peru trying to move to this scheme of making all the system interoperable, and setting the standards, setting the rules, the regulation has been very, very challenging. If you move to the cross-border and you need to harmonize different regulation, different type of infrastructures, different type of ecosystem. So I think there a collaboration between regulators to align the objective of making cross-border payments much more faster, efficient, cost-effective, I think is quite important.
Thank you, Paul. Praveen?
Yeah, I mean, yes, there are a lot of challenges actually. I mean, some pointers from a regulator's perspective has been covered, but what I see is from a customer's perspective, you are traveling from one country to the other one, and you want to make a payment, let's say, in a local currency. Then what happens is, when you make a payment and your account at the home country gets debited and the merchant doesn't get paid. See, I mean, there are the standards connecting APIs, but at the same time, the customer's knowledge about that interoperable payment system and the merchant accepting it in a seamless network environment is one of the greatest challenges that we have seen. I mean, even now when we talk about Nepal and India, where cards are very dominant method of cross-border payment, we see similar thing happening. One accounts get debited, but the payments is not made. So these kind of challenges. On the other side, when we say that there are the interoperable payments available across the border, whether the customer who is traveling is getting that confidence of not carrying a cash, that is the key thing. The people need to know that their transaction is going to be 100% success. This is one side of it from a customer's perspective. The other side is when there are already established payment system providers in the country at the both side, I mean, of an interoperable environment, and the new standards are set for interoperability. And then that requires a certain changes in a lot of infrastructure at the payment service providers level, or to enable the countries from a central bank's perspective, also enabling the both side of the infrastructure itself, which at the end of the day incur a lot of cost to the players.
I think that's what the fintechs are enabling today.
Yeah, and whether that cost is justifiable to the return on investment, whether they are going to get or not in a small economies.
Absolutely.
Yeah. So this kind of challenges you can see.
Yeah, Tom, your view.
Yeah, thanks. So look, following the lead and example of this beautiful country and what you have established with UPI, which is the shining beacon example of implementation of successful RTP globally, I think the other comparable system is probably Pix in Brazil, which is an outstanding success in that market. But following the lead of UPI and Pix, the world is now undergoing a real-time revolution. There are over 75 countries around the world that are rolling out their equivalent of Pix or UPI. And what we're building at Volt is really centered around exactly the subject matter here, in that we have identified that real-time payment systems are inherently domestic. And of course, the NIPL team here are doing a magnificent job exporting UPI and making it accessible in international markets. And UPI is a very mature and advanced payment system in that respect. But with RTP systems being inherently domestic, we want to harmonize them and bring them together to make them accessible, to make them interoperable globally. So that's exactly what we're doing at Volt, and that interoperability we think is key to the growth and adoption of RTP systems around the world.
Thank you, Tom. Honor.
Yeah, the challenges are multifaceted. If you look at the regulatory side, the regulators are having challenges propagating their systems inside their own countries, not to even mention the interoperability of those systems in other markets. So you have players like Discover emerging as a new platform that connects the different countries together, and many companies are now piggybacking on that platform as an alternative to credit cards and so on. And if you look at the merchant side or the user adoption side, we live in a highly fragmented market now. You have each country with multiple payment options emerging, with investments happening from different markets. For example, in Southeast Asia, there were so many Chinese companies investing and trying to propagate their own payment methods. If you look at Indonesia, for example, you have maybe 20 different payment methods, e-wallets and so on that emerged, and consumers have a choice. But the choice that they make in the e-wallet may not actually work in another country once they travel. So you have these new networks emerging like Alipay Plus and so on. So there's this new movement of interoperability between different markets, and whoever joins that network benefits from that, and the merchants benefit from that, and the users benefit from that. So there's going to be, I think, more works to be done to make sure that these payment methods work across the borders.
Thanks, Honor. Common last question to you all. One, it's a Genie question. Let's say I'm your Genie. Okay, one such desire you may have for cross-border, the fields which you are, some into remittances, some are into merchant payments. What is that one thing, wishful thinking you may have, you would like to see, Adeeb?
Yeah. So, in 2 words, first being real-time, and second being seamless.
Absolutely, very, very, very right words. Paul?
Real-time, of course, and also cost-effective.
Okay. Praveen?
From a practical perspective, I have been in banking since a long time, and my wife is also a regulator,
Wow.
So and whenever people, they travel from, in our neighborhood or in friend circle, whenever they travel outside, they ask, for a currency exchange help. So my dream is, people usually 10 to 15 requests we get in a year. I want that to be 0. So that's my dream.
Okay.
Yeah.
Okay. Tom?
3 words: global instant payments.
Wow. Okay. Powerful.
Yeah, I think if the Genie were able to give the capabilities of Visa to any payment method, I think we'll be in good shape.
Wow. That's a good way of presenting it. Okay. Specific questions to each of you all. Adeeb, starting with you. Your thoughts around advancement of cross-border payments in the GCC area, in the growth in GCC, and this region as a payment hub, the adoption, the evolution of digital payments in your region.
So if I were to break it down into India specific, GCC in general contribute to a little over 26% of the entire remittance that flows into India. And if you look at a world perspective, the second largest corridor after US and Mexico. So it's a very prominent area, predominantly why? Because a large number of expat population, Indian subcontinent being the largest, India, Bangladesh, Pakistan, Sri Lanka, Nepal. And then, of course, on the Asia Pacific side, you have a lot of Filipinos and the rest of the community down there. Nowadays, we find a large number of African expatriates moving into the GCC market, predominantly because of the growth. If you really look at the last 4 years of growth pattern, GCC have really thrived, especially UAE have seen 6% growth on their GDP. Saudi has been doing around 7% of growth. We've seen a lot of infrastructural change that has been happening, and a lot of development of infrastructure also that requires large number of migrant populations to come inside, help them to create that kind of infrastructure in the country. While these are the hard infrastructures, we've also seen a lot of changes on the soft infrastructure, whether it's rules and regulations, opening up of golden visa in UAE, getting people to work around. Even the payment landscape has changed to a large extent, where earlier the payment was predominantly for family maintenance back home. Today, GCC is also becoming a hub where, you have freelancers basing themselves out of, influencers basing themselves out of UAE and Saudi Arabia. So, there is a lot of different segment of payments that are coming inside. 10 years ago, when we were in this line of business, for cross-border payments, it used to take between 12 to 24 hours. Today at Lulu Financial Holdings, we are proud to say that our TAT time is very close to 30 seconds, and predominantly 80% of the transactions would have less than 15 minutes. Yeah, it has its own challenges. The cost of funding has gone up. Predominantly holding of funding has gone up. India requires pre-funding scenarios to happen down here. A large volatile currency requires a stronger and robust treasury department to be set up. So there is n number of challenges, but it's been worthwhile. And while GCC today still records the lowest cost when it comes to cross-border payments, around 2.5%, where world average is still sitting at around 5%. So in many aspects, the central bank of the region has been very forward-looking in making sure that this industry is a very prominent industry. And unlike many other regions where it is a mom-and-pop setup, the cross-border payment industries in the region is actually a central bank regulated industry. That means that we are mostly at par with any banks when it comes to compliance and regulatory frameworks as such. This gives a lot of credibility to the institutions that has been working down there. And there's been a large support from the central bank in making sure that our relevance are continued even while the disruption of the fintech industry is happening inside. So it's been a great run for the last decade and a half, and I think so it's even more interesting coming inside. 6-7 years ago, somebody would have asked me, I would say that the cross-border payment is a sunset industry, and today, in the last 4 years, it has really changed the entire demographic, and today we look forward to getting into many more spaces in the payment industry.
Thank you, Adeeb. Paul, that's again a regulator's view. Now, countries are integrating domestic payment platforms and various methods to enable interoperability. What are your views to ease the settlement aspect of it? The settlement piece. We see all this online integration happening. This platform talking to that platform, and we are it's borderless payments we say. But there's a very important aspect of settlement. My personal interest. How do you view this? How can central banks ease this piece?
Well, this is a bit new as well for central banks, so particularly in emerging market economies. We used to focus more our infrastructure on local markets and local monetary operations. Now, with the development of instant payments, fast payment, cross-border payments, we have to think the possibility to offer as well settlement services for these new developments. In Latin America, for instance, very recently, the stock markets of Peru, Chile, and Colombia has joined together. And then probably in the short term, there will be the need to offer an infrastructure to settlement instantaneously these transactions within these 3 countries in the same currency. So I think there are many options. One possibility that central banks have been discussing is the possibility to have multiple accounts of RTGs in different countries. For instance, in the case of Chile, we could have Central Bank of Peru an account in pesos in Chile and vice versa, like FX swaps, that can allow the instant settlement of operations across our countries. Also, we've been exploring with the support of the BIS, the possibility of CBDCs, wholesale, multi-currency CBDCs that can make a leapfrog in our way we can provide this service to the market. So this is a new territory for central banks. But I think it's a path that we will have to follow, that expand the services of settlements that we provide.
Can I ask you 2 out-of-syllabus questions? We didn't. It's just, you look at CBDC only for, just a view, only for wholesale payments, or are we looking at CBDC for retail payments also? Yes or no, that's it.
I think both. We believe that there are potential gains for the entire ecosystem, so also in the wholesale section and also retail CBDC options can be complementary to the.
And do we see, a blockchain or a DLT kind of a mechanism for settlement? That's at the future, because that's what my interest of question is on settlement. We are doing innovations on the online messaging piece. Settlements, you think, many countries doing the settlements in DLT or maybe blockchain kind of a model?
I think in the future, this will have to talk each other. I see development where some countries probably will move to the technology DLT and others will use more standard technologies. But at the end of the day, those will have to interconnect.
Thank you. Thank you, Paul. Praveen, what kind of growth and enhancement do you perceive in the cross-border payments between India and Nepal? If you can share your views on this.
Yeah, I mean, I'll tell you a story here. I mean, yeah.
The story is?
Yeah, it's a small story, obviously. I belong to a bordering town with India, in Nepal. I mean, we have an open border. So what happens there is, whenever somebody wants to buy something, they can literally walk down to India and buy something and pay in a local currency, that is in a Nepali currency. And I'm telling you, literally from my house to the Indian side, it takes 5 minutes for me to walk and go to the other side. And same thing happens, from the other side also. Whenever they want to come into the Nepal and buy something or go, visit some hills, they can literally go there in minutes, and they start paying in INR currencies. So the INR currency gets dumped at the Nepal side, and NPR currency gets dumped at the India side. And the currencies are collected by some people, from everybody, and then they trade INR and NPR in the bordering town. While we have a pegged currency between Nepal and India, it's pegged entirely. So that dumping of the currency at the both sides in the border area creates an instability in currency exchange, which we see because of the this digital payment interoperability will be wiped out. So that helps a lot into the, stabilizing the currencies at the bordering town. I mean, for the audience, what I want to say is, Nepal and Nepal is a rectangular country, and from three sides it is connected to India. Same thing happens at the China side also. It's the same method, the currency holding and then the trading at a unstable environment. So with the interoperability, I believe a stability will be there on a digital payment perspective. On the other side, there are around 40 lakh Nepali people who works in India. They regularly send remittance to Nepal via a formal channel, but because of the lack of efficient payment method, there are around more than, whatever transaction currently happening, more than double is happening through an informal channel. And Nepal's GDP is around 25% is covered by the remittance itself. So imagine a contributor to nearly 30% of the 30% of that 25% is from India. When the remittance becomes interoperable, the seamless digital payment from India and Nepal, the GDP itself is going to get better. So I see a lot of growth happening once this interoperable digital payment is in place. Yeah.
Let's root for an IPL.
Yeah, entirely. Yeah.
Yes, Tom, what is Volt's strategy? What I've learned a little about Volt is, there are two kinds of acquiring. One is directly acquiring merchant, and then you have, directly going and acquiring an aggregator. Is it that's Volt's strategy to go and acquire, aggregator directly, or do you also perceive looking at merchants being acquired?
Yeah, so a few years ago, there's a couple of pretty senior industry executives that came together for a lunch or a coffee or something. My boss and our chairman at Volt is a chap called Robert Kral. He was one of the founders of Adyen. We've also got the president of WorldPay on our board. And so we've got a very senior team of payments industry executives that came together to build what we identify as the future of payments. We just fundamentally believe that real-time payments is the future, and that at some point in time, real-time will be the only time. And I don't know whether that's 5 years or 10 years or 15 years from now, but it doesn't matter. We're addressing the future of payments, and we are building the world's first global real-time payments network. What we, in the countries that I've been raised in and grown in, Visa and MasterCard have obviously been dominant in those markets. I was raised in Australia, I now live in England. And in a sense, in these Western markets, I suppose they're called, we are really constrained by the legacy of Visa, MasterCard, whereas countries like India and Brazil have really been able to go straight to the future, like Michael J. Fox in his time machine, to real-time account-to-account payments. And it's that example of UPI and that example of PIX, as I mentioned earlier, that we identify as being the future of payments. And one of the things that we recognize, so I'm going to keep this short because Maria keeps on telling me off for too long, talking too long. But one thing that we identified is where Visa and MasterCard have got a single proprietary global network. The new real-time payments infrastructure, as we discussed earlier, is inherently domestic. You've got UPI and PIX, but you've got the new payments platform in Australia, PayNow in Singapore, PromptPay in Thailand, Do It Now in Malaysia. In America, they've just launched FedNow. In Canada, RTR is coming. I could go on and on and on. But every country is rolling out its own implementation or equivalent of UPI. And so whilst this movement to real-time payments is global, every country is implementing its own instant thereof. So we are harmonizing to a single point of access and to a single infrastructure and to a single protocol, those payment systems, so that through a single language, you can communicate and interoperate across that global network. And so we're just 3 or 4 years into the journey, and it's been exciting so far. It's not just about connecting the real-time payment switches either. We're building the underlying cash management infrastructure to be able to collect funds, to manage cash positions, FX and cross-border funds flow. So yeah, that's in a nutshell what we're about.
My quick question, you still not answered me. Do you plan to acquire merchants singly?
So we've got a couple of go-to-market strategies. My chief revenue officer is here in the front row, is probably better to answer this than I am. But we work through partners. So we are the only open banking company, for example, on the Shopify marketplace. We work with WooCommerce and a number of other shopping carts. We work with technical gateways like Honor's company, Paymentwall, but other companies like that, and PSPs. We are the global RTP partner for WorldPay. We are the global RTP partner for Worldline. So yeah, we have a number of go-to-market strategies. We do have a direct sales team, and that can create some conflict with our partners. So what we ensure that we do is that we don't do direct integrations, right? We do get approached by merchants. They do want to understand what our open banking offering is, but we will then refer them to one of our integration partners to ensure those conflicts are not there.
Thanks, I got it. Honor, how has consumer behavior, you have been into payments for some time, but Paymentwall, it calls out loud. How has consumer behavior evolved in the online space, and or maybe merchant behavior? Is there an ask? Is there a real ask for or a pull for local payment methods? Because we are moving from back Visa, Master, and there are new domestic schemes which are coming through and domestic RTPs coming through. Are merchants really asking for this? Because any consumer would be having a Visa, MasterCard, right?
Not necessarily.
Is it?
I mean,
that's my question. Yes.
Okay, perfect. I mean, my experience only goes as far as 13 years. We started our company in San Francisco, and we saw problems with the game developers on Facebook, where they would launch a game, and the games would become viral in Vietnam, Philippines, Southeast Asian countries, and so on. And the game companies bear the cost of the servers. And they have millions of users, but none of these users are paying. And they can't make any advertising revenue. They cannot make any payments revenue. So they get frustrated. And what they want to do is they want to turn off the game and then relaunch it again, because they want to get rid of these users so they can eliminate these people who cannot pay, and they can replace them with American or British or Western users. It's quite discriminatory. It's pretty bad. I grew up in both the United States and Turkey, and I traveled between the two countries at really early ages, so I know the differences between the two mindsets. And I said, oh, this is actually problematic. We need to solve that. How do you solve it? We basically started making phone calls to whatever payment provider we could find in Southeast Asia, and we integrated them onto our platform, and we enabled these payment methods on Paymentwall. And finally, those users that could not pay started paying. And the game developers saw that they didn't have to turn off the game. They actually could process payments from those markets and make profitable game businesses out of these users. So suddenly, out of 1 million users, you could extract $100,000 a month, and that easily paid the server costs. So that's how we started. And I saw that we have the same example in different verticals, not just games. With e-commerce, if you list your products on your website, and if you want to sell just with PayPal or Visa or MasterCard, and if you want to sell to, let's say, Southeast Asian nations or Europeans, even Europeans, although we would expect them to use credit cards, they don't choose to pay with credit cards. Germans are quite risk-averse with using their credit cards online. Spanish people don't want to use their credit cards online. Portuguese, usually create a new credit card number and use that number online. So each nation basically developed different ways to pay based on their national characteristics and so on, and what was available in those countries. So this demand coming from those markets based on the culture of the country, based on what's available in the country, and then whether PayPal or Visa and MasterCard were able to penetrate those countries early on. So there's a consumer side demand for more payment methods, local payment methods, and the merchants need to add those methods in order to sell to those markets. So this is consumer-driven, it's merchant-driven, but it's also the literacy of payments across the world. So most companies don't have the time to build their own business and also go and study which payment methods are popular on the other side of the world. But you have a global economy now. Things are being sold across borders. Things are being shipped from China to other markets, from other markets to, again, even other places. So you have to enable different payment methods, and the demand is from all the sides.
Thank you very much. We have about 7 minutes. A quick message to the audience with respect to your business. What would you like to? What each of your companies are foreseeing for the next 5 years? Let's say, Adeeb, starting from you. What do you think is in store with Lulu Money?
I think so. It's a lot of technological changeover. What has been relevant yesterday is definitely not relevant today, is not going to be relevant tomorrow. So adaptation on new technologies, new business cases would come. So interoperability would come with its own cost structure and revenue structure. So you need to tweak the businesses towards that level. And of course, all this needs to be done keeping two things in mind: customers at the forefront. And the second is the sustenance of business when it comes to having a decent revenue to sustain that level of business. So I think so. Here it's a challenge to balance both, because in today's time we have seen the cost of doing remittance, while the cost has remained the same. The cost of doing remittance have really gone up. The level of compliance have gone up in relation to the country that you operate inside, and towards the level of larger integration. So while every entity is asked to keep up their standards, we have also to keep up the idea of that. We need to make sure that the cross-border payments has to remain at a certain cost level, and that should not move. To the sustenance of business would depend on how the interoperability would come in a form that benefits both the customers and people who are doing the business.
Thank you, Adeeb. Paul. Okay, I go back to the regulator's view every now and then. I know that for a fact there's an ACH which is running in your country, all right, and this whole ACH versus maybe central banks working in your country, creating platforms. I just wanted to tell why a central bank is building a platform. You've seen Colombia is doing something, you have somewhere else doing this. Why is a central bank looking vis-a-vis an ACH? Just a message to this crowd here. Why?
Well, thank you for the question. I think it's very important. Although there is infrastructure already in place, but the problem is a competition. So the infrastructure is owned by the incumbent players, basically large banks. And as a regulator, we would like to see more newcomers enter offering new services. So fintechs are welcome. So please look at South America and Peru. There's a lot of potential there. As a central bank, we are now committed to provide a regulatory framework, infrastructure, so to allow more players to come and more competition, better services, more cost-effective services.
The fintechs here. Okay, Praveen, how will IME Pay looks at enabling cross-border? And I would focus more on the India-Nepal corridor.
That's what we are looking for. We are looking forward to it in a very positive way, very aggressive way. What we have seen is the success of any payment system relies on the three factor that we learned yesterday also from one of the finest gentlemen in the world, I mean, Mr. Dilip Aspe. One is the central bank and government's vision. The second one is the continuous innovation around the infrastructure. And the third is the customer awareness and the partnership that's established within the ecosystem. So from IMEP's perspective, we will be looking forward to collaborate with a lot of Indian fintech companies, establish a lot of partnerships so that this seamless payment across the border will be more efficient, more economical, and more user-friendly. So that's what we will be looking for. Yeah.
Tom, I know you're working with us. I know you're looking at becoming a real-time payments aggregator. In the next 5 years, what do you look at possibly, how many such real-time payments platform would you partner with and you'll have a realization on ground? What realistic view you putting forth for next 5-year strategy?
Yeah, sure. I think in the World Global Payments report, it identified there are 74 countries around the world rolling out their equivalent of UPI. So that's the target market. Not all of those payment systems are anywhere near the maturity of UPI. Very few of them are, but they are developing and maturing over the course of time. I think what's also interesting, though, is central bank digital currencies, which my colleague mentioned, and there is also regulation in certain markets around stable coins, which is being introduced. So I think the whole architecture on which a payment runs, in my view, the future of payments is open banking / RTP together with CBDC, together with stablecoin, right? I think the days of a Visa MasterCard scheme are numbered. I don't think Visa MasterCard in their current identifiable form will exist 20 years from now. I don't know whether that takes 20 years. It may happen sooner. But I think the days of merchants waiting 2 days or 3 days to receive their money, I think that will be laughed at in a few years from now.
I like that. Okay, Honor, I know you're present globally. I wanted to understand what are your plans with India perspective? Of course, this announcement with NPCI and IPL is great. But do you plan to expand or maybe acquire merchants here? Because you have a niche segment of clientele. Yes. Okay. How do you look at driving Indian consumers to this kind of or is there real Indian consumers, because on the online gaming piece and stuff, the kind of niche segment you cater to, what is the kind of transactions or maybe the business you're looking from the India side?
Sure. So we actually opened our offices in India about 5 years ago. Our initial goal was to launch our payments platform in the market. And we saw the regulation change really fast. The RBI was really swift. It's probably one of the most knowledgeable and swift regulators in the world, able to execute really fast in defending the economy in India against foreign perpetrators. So I think they did a great job in acting swiftly. What we realized is they required the payment providers to not charge any fees to the merchants. With the UPI system and also with RuPay, you could only charge with Visa and MasterCard. So that eliminated our opportunity to make money from the Indian market. And we saw a lot of local payment companies emerge, such as Razorpay, and PayU was already there, and so on. So we decided to not proceed with a license. But we kept our offices here because there's great talent, and we kept an eye on the market. What we realized is that there's two problems. One, if you are a foreign merchant and you want to process payments from India, it's really difficult to take the money out of India. There's accountancy that needs to be done within the market. You have to pay heavy taxes, withholding taxes, and then you can take the money out. So that makes it really difficult for digital merchants to move into India. Second thing is the consumers, when they want to buy something from the outside, their credit cards get blocked. So they're not, actually most of the time the credit cards are not even open for foreign transactions. So you'll see a high decline rate when those cards are put into the system. So our solution was to try to find a way to get the users to pay and for the merchants to process payments. That's why the UPI announcement is a good one. Now we will be able to help foreign merchants serve the Indian consumers. That creates a big opportunity. Maybe that'll create some competition in the market also with new products coming into market. And also the consumers will be able to use their preferred method, because over the years, UPI became the main way that everybody pays in India. Even Google had an interesting strategy in this market. Obviously, they would like to have ownership over the infrastructure and so on, but they simply integrated UPI and people started paying to each other with Google Pay using UPI. And there were some rewards mechanisms, some gamification to encourage more and more users to use the Google Pay system. And it's one of the main systems now. Google does not have that kind of penetration in any market. If you look at the whole world, this is the only market that it has that kind of penetration. So that's kind of our approach. That's what we saw in this market. Now, Indians, I would say, there's a big population here. So it's the size of 2 or 3 European Unions or 5 United States. So the population is huge. But you have about 200 million people who earn the same level of income as middle-class Americans or middle-class Europeans. So that's a really big market by itself. If we can get those people to start buying, that will eventually trickle down to the lower income levels of the society and so on. So that's kind of how I see this. Now, from my company's perspective, I think there's opportunities all over the world for digital payments. And people should be able to pay and buy digital content first. That's usually their first experimentation of buying things online. The second thing becomes usually e-commerce or food and so on. But usually people start experimenting with digital product purchases. And then after that, they move on to other things. So hopefully we can serve the people to buy things from abroad.
Thank you. Thank you, Honor. Vaishnavi, did we do a good job? Okay, questions? Y'all can pick. I don't want to be part. Honor?
Yes. Yes, please.
Thank you. My name is William from NIBS, Nigeria. Now, I'm going to focus my question, I guess, to Honor and Tom a lot more, because your intro, you mentioned something interesting. You've already been facilitating interoperable payments across borders. Now, I'm assuming something based on what we've heard so far, that countries, we may not get the kind of traction in terms of adoption early. So how do you get these payments done when the framework from the central bank perspective may not necessarily be up to speed with the traction you have in your business? I don't know if you get my point. You're doing this, but we all know that it takes a while for regulation to catch up. So how have you been able to do that without that kind of traction on the other regulatory side? Thank you.
Okay, I'll answer the question. So our approach has been a bit different. Since we started the company 13 years ago, there was no regulation worldwide that was implemented. You only had some frameworks and so on that were in implementation phase in the European Union. In about 2015, I saw that there was a need for us to learn about compliance and learn about how to abide by the new rules that could emerge. We started building a product for compliance, basically KYC and KYB. I had my team trained on that in Amsterdam because we were able to find some experts there who could provide training. So that was our internal progression towards compliance. Now, if you look at most countries now, I would say maybe Latin American countries are still lagging behind a little bit, and African countries are lagging behind a little bit. But in Southeast Asia, there are firm decisions made about compliance, and countries have implemented their own systems of compliance and regulation for the new payment methods to emerge. European Union had PSD1, PSD2, and now PSD3 in the works. So there's interoperability between all the banks, actually. Volt is somewhat benefiting from that because you're required as a payment provider to enable other payment providers to take money out of the accounts and move funds across different payment systems. This is actually a requirement by the law. So nobody can create their own segmented payment solution, segmented APIs, and not have access to other people and so on. So that's how everything worked out. Now, how do we work across these? Again, in the past it was easier. Nowadays we have to walk on broken glass, and we have to make sure that we are not really going against the rules in any country. So we have to study the local laws. We have to hire lawyers. We have to hire people who are regulatory experts. We have to visit the central banks and the teams that are in charge of compliance. So it's become a lot more difficult to build an interoperable system. But then also companies and countries are working towards systems that enable interoperability, like Alipay Plus. Was an initiative by Alipay across the Southeast Asia region. They first invested with Ant Financial into various payment providers across Southeast Asia, and then they wanted Chinese citizens traveling across the region to be able to pay with their WeChat Pays and Alipays, because most Chinese citizens, and I believe every year there's about 300 million travelers exiting the country from China, spending money globally, and Southeast Asia is kind of their home territory. They like to go there first. So Alipay wanted to enable those travelers to be able to spend in those markets. So you have these initiatives now that enable interoperability, and those big companies figure out those solutions for that. We do our best to enable an aggregation methodology. So we collect the funds in a reliable jurisdiction, and then we move funds that way.
Can we have this?
Please. I'm Raju Dungal from Kathmandu, Nepal. I run a news company there. My question is for Paul, he's a regulator. Beside me, we have our regulator as well. Theme of the GFF is Global Collaboration for Responsible Financial Ecosystem. Right? I want to link with that my personal experience. I purchased a pass for this GFF through the credit card of Czech Republic Bank. So it did rejected. My payment has been deducted from my account, and then they haven't received the payment here in the merchant of that particular GFF. So till the date I didn't back the payment in my accounts. So I came here, discussed with them, and then as a media, thank to them, they give me a pass without purchasing the by the cash. I thank them. So how can I trust? It's a question of million of people. It's not mine only, I think. So, and one more is that, how do you track the cross-border payment systems? How do you track? It's a, and it's about, it has to be done within a 5 to 10 seconds, but in this case, how do you track?
So Paul, I think this question is around the regulations on, customers, dispute kind, if not received, and maybe in cross-border tracking piece.
Yep. Well, this is one of the challenges, of course, of interoperability cross-border. I think technology can help to gather information, systems that can monitor. Regulation can help as well, put in the rules of the game there. But that implies collaboration between regulators across border, probably. So I see that as one of the challenges that we will have to face in the future.
So no more questions. The MC is right behind my back. So thank you very much, lovely audience. So we can have a question offline, maybe. Thank you very much, lovely audience. And big round of applause to the esteemed panels here. Thank you all.
Thank you so much, ma'am, gentlemen. I request you to kindly stay back on stage as we have mementos to be presented. We've got mementos from Perfumes. And ladies and gentlemen, let's have a round of applause once again for all our esteemed panelists. Thank you so very much. An absolutely fabulous session.